Energy, it's the invisible force powering pretty much everything we do, isn't it? And it's
Yeah.
always shifting. Sometimes those changes are, subtle, just ripples. Other times, though, it really feels like the ground is moving under our feet, fundamentally reshaping how we even think about power. Today, we're doing a deep dive. We've got this stack of sources, really fascinating stuff looking at these shifts happening right now all across the energy landscape. We're pulling from news articles covering big policy moves, places like Nigeria, Germany. Then there's recent market data on oil prices, inventories, and a really bold vision for the future, something called stellar energy. Plus, we'll even look at how energy tech in your own home fits into this huge picture. Our mission, like always, is to unpack the most important bits from these sources, understand the forces at play, and see how it all connects. Think of it as your shortcut to getting up to speed on these key energy developments. Okay, let's unpack this. So policies, they're kind of the rules of the road for energy, right?
Yeah.
And right now, those rules are definitely being rewritten. Some interesting places, some big impacts.
Yeah, and what's really striking, I think, from these sources is just the scale of ambition in some of these efforts. Take Nigeria, for example. They've drafted this new plan, the National Integrated Electricity Policy and Strategic Implementation Plan. It's a bit of a mouthful. NIEPC.
NIEPC, okay.
But this isn't just, small adjustments. It's aiming for a major overhaul, making their whole electricity sector more resilient, more efficient, and really tying it into national development.
So tackling those fundamental issues like
Yeah.
reliability, getting power to more people.
Exactly. Bukola Dubey, she's from Mecom Cables and Wires, she highlighted some key goals. Improving liquidity in the power sector. That's vital for investment.
Sure.
Enhancing grid reliability. I mean, that's huge for daily life. Fostering an investment-friendly environment, integrating renewables, that's a global thing now.
Right.
And crucially, expanding electricity access across the tree. It's comprehensive. And this comes right after the Electricity Act 2023. That act basically decentralized things, gave states more power over generation, transmission, distribution. It created this whole new framework, and we're already seeing states starting to implement it. So there's real momentum there.
How's the industry reacting? Are they on board?
It sounds like it. Dubey, who also heads the Cable Manufacturers Association, she praised the policy, noted its focus on boosting local content, even promoting gender inclusion, and she made a point of affirming the quality of Nigerian-made cables, basically saying, the local industry is ready to meet the standards for this big infrastructure push.
Okay, so a really foundational shift happening in Nigeria. Meanwhile, halfway across the world, Germany, huge economy, also looking at some pretty critical adjustments to its energy strategy.
They are, and it's fascinating because, they're already deeply committed to that 2045 climate neutrality target.
Right.
But the path to actually get there might see some, unexpected turns. One big discussion point is potentially lifting their long-standing opposition to nuclear power.
Wow, nuclear, really?
Yeah, maybe even treating it equally with renewables in EU legislation. That would be a significant pivot.
That feels like a huge shift.
It does. And another potential game changer, possible approval of carbon capture storage, CCS.
Okay.
This would let them use natural gas for things like blue hydrogen. You capture the CO2, you store it. It sort of aligns them with international protocols like the London Protocol. It's maybe a pragmatic step.
Even if it's not perfectly green?
Exactly. Now, challenges definitely remain. Like,
Yeah.
how do you decarbonize heating? That sector uses a ton of gas. But interestingly, there's this other angle. If Germany eases its debt brake, allows more government spending, say on infrastructure or defense, that could actually boost demand for gas and electricity in those sectors.
So they're juggling a lot, hitting climate goals, dealing with the fallout from the energy crisis, trying to keep industry competitive. It sounds complex.
Oh, very. Some industries, like chemicals, they're seeing a bit of a comeback after being hit hard by high energy prices. But there's still this debate. How best to help businesses? Regulated industrial prices, or just, cut taxes.
So whether it's a massive plan for grid reliability in Nigeria, or Germany rethinking its whole approach to nuclear and carbon capture, these big policy moves are setting the stage. And I think the key thing here for you is recognizing how these national decisions, they can eventually filter down. They can impact the energy you use and maybe even what you pay for it. Now let's shift gears a bit from policy to, the heartbeat of the energy world, the markets, oil prices especially. They've been doing that volatile dance they do.
They certainly have. And what's fascinating, I think, is just how many different things are pulling the strings all at once. Makes predictions pretty tricky. Looking at recent data, we've seen prices bouncing around, like late May 2025, WTI futures for June 25 were around, what, $62.56, showing declines over prior periods. But then more recently, say June 25th, 2024, WTI and Brent dipped a bit, maybe 1%, yet they were still up for that month overall.
Riding on hopes for summer demand.
Yeah, summer demand hopes and that underlying geopolitical risk that never quite goes away.
So short-term ups and downs, but within a generally kind of uncertain trend.
Exactly. And a huge driver of those short-term moves is inventory data. The recent API data, week ending June 21st, 2024, it showed a crude build, over 900,000 barrels.
A build? But weren't analysts expecting a draw?
Totally defied expectations. They expected a draw of maybe 3 million barrels.
Yeah.
And the Strategic Petroleum Reserve, the SPR, that also saw a build, hit its highest level since late 2022. So that build, when everyone expected a draw, definitely put downward pressure on prices that week.
Right.
Then you've got geopolitics, always the wild card, tensions between Israel and Lebanon, Hezbollah, potential Iranian involvement. It's always on the radar. One analyst actually noted this risk is kind of preventing a deeper price slump, even though markets seem a bit, I don't know, immune sometimes.
So they're pricing in the risk even if nothing happens immediately.
Sort of, yeah. We saw prices spike back in April 2024 just on fears of a wider conflict between Israel and Iran, remember? So even the threat can keep prices higher than they might otherwise be. And then there's stuff like trade tensions. President Trump's threat, 50% tariffs on EU goods, that adds another layer of uncertainty, impacts market sentiment.
Even if the deadline got pushed back.
Right, extended to July 9th after talks. But the scale is just massive. Hundreds of billions in EU exports to the U.S. every year, and that includes petroleum oils. On the supply side, you've got fewer U.S. oil rigs operating a 3.5-year low, actually. That usually signals lower future production.
Okay, makes sense.
But counteracting that, there are concerns about increasing global supply, and the possibility that OPEC Plus might decide on further production increases. That puts question marks around the supply-demand balance heading into 2025. You also watch economic signals, weaker consumer confidence, falling manufacturing indexes. Those can hint at lower demand, which, weighs on prices, and even specific company warnings, like SLB, used to be Schlumberger, forecasting lower spending by oil companies. That shows the industry itself is adjusting.
It's this incredibly complex mix, isn't it? Drilling activity, underground storage levels, international politics, even trade threats. What this really means for you, listening, is that those global events you read about, they aren't just distant headlines. They're directly influencing the price you see at the pump or, on your heating bill. Okay, let's step way back now, away from the daily market swings. Some experts are looking at something much, much bigger, a truly transformative shift in how humanity relates to energy.
Yeah, this is where that concept of stellar energy comes in. And it's not just like another alternative to fossil fuels. It's framed as a fundamental redefinition, potentially pointing towards a future of, well, they call it superabundance.
Superabundance. That sounds almost the opposite of everything we usually hear about energy scarcity, needing to conserve.
It does, doesn't it? But the core idea is about harnessing energy from truly abundant sources, primarily the sun, that's the stellar part. But the key isn't just solar panels. It's combining solar power with battery storage and supplementing that with wind. They call it the trifecta.
Solar, wind, and batteries. The trifecta. Okay.
Now, think about how different that is from conventional energy. Conventional is mostly flow-based, right? You burn coal, you burn gas, the resource gets depleted.
Right. Use it, and it's gone.
Exactly. And it tends to be centralized. You need these massive power plants, minimum scale. And often, there are risks. Nuclear dangers, waste, potential accidents. Stellar energy, they argue, is stotch-faced. You make an upfront capital investment in the assets, the panels, the batteries to capture and store the energy. But the source, the sun, it isn't depleted. It keeps coming. It's inherently decentralized. It can work at any scale, literally from like a watch battery up to powering a whole country. That drastically lowers the barriers to entry. And they argue it's fundamentally safer. No catastrophic meltdown risks, fewer waste issues.
So instead of constantly digging up and burning stuff, it's more about capturing and storing what's already arriving, basically everywhere.
Precisely. And there's this analysis they've done looking at clean energy systems that revealed something fascinating. They call it the clean energy U-curve. It shows that the lowest cost system isn't one with minimal solar and no storage. And it's not one with, say, weeks of battery storage either, which is what some people used to think.
Oh, so what is it then?
It's actually a system with significant solar and wind capacity, plus just a few days' worth of battery storage.
Just a few days, not weeks or months. That's surprising.
It is, and here's where it gets really interesting. When you design the system for that lowest cost point, you naturally end up producing an enormous surplus of clean electricity, electricity that has near zero marginal cost to produce once the system is built. They call the surplus superpower.
Superpower. Okay. So building the cheapest system automatically gives you tons of extra, almost free energy.
Essentially, yes. And the return on investment for getting that surplus is, well, it's nonlinear. This is key. If you invest, just say, 10 or 20% more capital than the bare minimum needed for the absolute cheapest system, you can get maybe 5 to 10 times the return in available superpower.
Wow, that's counterintuitive. Spend a bit more, get way more back in essentially free energy.
Totally flips traditional energy economics on its head,
I
right?
mean, really makes you think about value differently. I mean, if energy becomes that abundant, almost free at the margin, how do you even charge for it? How does that business model work?
That's the million-dollar question, isn't it? If it becomes too cheap to meter, the argument goes the business model has to shift completely. You don't charge for the kilowatt hour anymore, like the old phone companies charging per minute of call time.
Wow.
The value moves up the stack. It moves to the applications, the layers of utilization, the new businesses and services that can be built on top of this abundant low-cost power. Think about how the internet evolved. The value isn't really in the basic data transfer anymore. It's in Google, Netflix, e-commerce, everything built on top.
I see. So energy becomes the platform,
Yeah.
and the value is in what you do with it.
Exactly. And batteries are absolutely critical to this entire vision. They're not just an add-on. Batteries take that superpower, maybe generated when the sun's shining brightly, and make it available 24/7. They allow you to use it overnight, power industries around the clock, make the whole system reliable. The analysis suggests we're going to need vastly more battery energy storage capacity than, frankly, almost anybody is imagining right now.
So storage isn't just moving things out, it's fundamental. It unlocks the abundance and makes it usable whenever you need it.
Couldn't have said it better. And interestingly, from a national perspective, deploying this kind of stellar energy system is framed as surprisingly affordable. Maybe just a few $100s up to a couple of $1,000s per person per year in investment. When you weigh that against the value created,
Yeah.
it's presented as a no-brainer investment, even before you fully account for the massive economic potential of superabundance. Now, to make all this work smoothly, there's also this idea of an energy bill of rights.
Okay, what's that?
Basically ensuring that individuals, communities, businesses have guaranteed rights. The right to generate their own energy, to use it, to share it, trade it, store it, without unnecessary regulatory barriers getting in the way, while of course maintaining valid safety standards and grid stability concerns.
This is, well, it's more than just theory, isn't it? It paints a picture of a future where energy isn't this scarce thing we constantly have to ration and worry about,
Yeah.
but an abundant resource that could unlock totally new possibilities for everyone. It really makes you wonder how different industry, the economy, even just our daily lives could become. And, this whole idea of decentralized battery-backed energy.
Yeah.
It isn't just some far-off future vision. It's actually starting to show up in practice sometimes, like right in your own neighborhood, maybe in your own home.
It is. We're seeing it with things like virtual power plants, VPPs. These are basically systems that link up lots of decentralized resources. Think rooftop solar panels, home batteries,
Right.
and aggregate them. We actually heard about the experience of one listener, Peter, who installed solar and got a battery. Peter's goal was pretty straightforward. Use his battery to avoid paying those really high peak time electricity prices.
Makes sense.
He got a discount on the battery itself by agreeing to join a VPP run by a big energy retailer, AGL in this case. And initially, he said, it seemed fine. Very gentle was his phrase. Got the discount, barely noticed the VPP using his battery sometimes, felt pretty smart about the whole setup.
Sounds like a win-win at first. Battery discount, lower bills.
It did. But then, apparently, his experience changed. He felt the retailer started using his battery much more aggressively, allegedly draining it down to really low levels. He mentioned 5% on a couple of occasions.
Oh, wow, that low.
Yeah, which meant that when he actually needed his stored battery power the most during those expensive peak evening hours, there wasn't enough left. So he was forced to buy expensive electricity from the grid anyway. He felt it was, a misuse, that the VPP was prioritizing other grid needs over his own reason for getting the battery in the first place.
That must have been incredibly frustrating.
And apparently, to add insult to injury, he also mentioned being put on something called a demand tariff.
Demand tariff.
Yeah, where you get charged extra based on your single highest half hour of grid electricity use during the entire month.
Ouch.
So being forced to pull power from the grid during peak times because his battery was low, that could then trigger a high demand charge for the whole month. He felt completely trapped by it.
Wow. So you invest in the tech specifically to avoid peak prices.
Yeah.
And the way it's managed actually forces you to pay more, potentially.
That was his experience, yeah. Now, it's important to note, AGL disputed some details. They claimed they always leave a minimum 20% charge, for example. And they disputed his account of the demand tariff notification, noting that it's usually the poles and wires companies that set those tariffs. The report suggests AGL actually stopped applying them later due to customer backlash. But Peter's story really highlights these concerns that consumer advocates have. Are the companies running the VPPs capturing too much of the value from these household investments? Are the homeowners who paid for the solar and the battery that are helping the grid getting a fair deal? Are they being properly rewarded?
That seems like a critical question, especially as more people get these systems.
Exactly. And looking ahead, you see potential government subsidies coming, like that $2.3 billion pledged in Australia, aiming for millions of own battery systems. Many more homes are going to have this tech. Batteries might even need to be VPP ready to qualify for subsidies.
Right.
Which raises that big question again. Who controls these assets? Who decides when and how your battery is used? Some manufacturers, like Tesla apparently, aren't too keen on other companies controlling their products after they're installed.
It's definitely a complex challenge, isn't it? Having lots of these small-scale systems, it can cause grid issues if they're not coordinated, but they're also a massive opportunity.
A huge opportunity. The absolute key, though, is figuring out how to orchestrate all these distributed batteries and solar panels so that the benefits, the cost savings, the grid stability are shared fairly between the companies managing the VPPs, the overall grid, and crucially, the homeowner who actually made the investment in the first place.
So if you're listening and thinking about solar or batteries, or maybe you already have them, your system is becoming part of this much bigger, evolving energy picture. And it raises a really crucial question for all of us. As these technologies get more common, how do we make sure the system in your home works best for you while still helping the whole energy system stay stable and reliable? And who should ultimately benefit the most from the energy it stores and provides? Wow. Okay. We have really covered a lot of ground in this deep dive today. From those specific national policy shakeups in Nigeria and Germany aiming for better grids, rethinking paths to climate goals, through the complex interconnected dance of global oil markets, swayed by everything from underground reserves to international tensions and trade talk, to that really transformative vision of energy abundance rooted in solar, wind, and batteries. And then right down to the practical, sometimes frustrating challenges playing out with home energy systems, like those virtual power plants.
Yeah, it's a lot, but what's fascinating, I think, is you can see this clear thread connecting all these seemingly different pieces. It's the accelerating shift in our whole relationship with energy, whether we're talking about national grids, global markets, or literally the panels on your rooftop. Energy is becoming more decentralized. It's potentially becoming far more abundant, and its value is being redefined. It's moving away from just being a simple unit of power towards, well, the possibilities that power unlocks.
It really highlights that, doesn't it? Energy isn't just about massive, distant power plants and pipelines anymore. It's increasingly becoming a local thing, even a deeply personal matter for individuals and for communities. So what does all this mean for you? As these energy systems transform, how will access to potentially super abundant, low-cost energy change the possibilities that are available to you? And maybe just as importantly, as these technologies spread, how can individuals and communities make sure they are active participants in this transition and that they are direct beneficiaries of it? Something to think about.